Hi everyone, welcome to our channel. Alright, let's cut straight to it. Gold is glittering brighter than ever. On March 14th, 2025, it shattered records, skyrocketing past $3,000 an ounce and hitting $3,004.71. That's not just a number, it's history in the making, people. But here's the kicker. Analysts say we're not done climbing. Goldman Sachs predicts $3,100 by the end of the year, and some experts are eyeing $3,300. So, what's driving gold's meteoric rise? Buckle up, let's break it down. First off, the world feels like a shaky Jenga tower. Economic uncertainty, geopolitical drama, trade disputes. When things get messy, gold becomes the go-to-safety blanket. And central banks? They're stockpiling gold like it's the last slice of pizza at the party. In 2024 alone, they bought over 1,000 metric tons, double the average of the past decade. Big-name players like Kazakhstan, Poland, and India are hoarding gold faster than you can say De-Dollarization. Yep, countries are ditching the US dollar and betting big on gold. Why? To dodge currency risks, especially after Russia's central bank assets were seized in 2022. Inflation's also got investors sweating. Prices at the grocery store are climbing, and gold is the superhero swooping in to save the day by protecting against rising costs. And with interest rates staying low, gold is looking way more attractive than bonds or other interest-bearing investments. Oh, and let's not forget Asia. India and China are scooping up gold like it's Black Friday on steroids. Pair all this demand with gold's limited supply, and boom, you've got a recipe for soaring prices. It's clear, gold isn't just shiny. It's reliable, valuable, and hotter than a midsummer heat wave. So what's the future of gold prices? In the short term, 2025 projections range from $2,700 to $3,300. But long term? We're talking $4,845 by 2030. And under bullish scenarios, maybe even $7,000. By 2035, some optimistic forecasts go as high as $7,370. But hey, before you dive headfirst into gold, remember, it's not perfect. Gold doesn't pay dividends or interest like stocks or bonds. Plus, prices can swing wildly, storage costs add up, and selling gold might put you on the hook for capital gains tax. Oh, and beware of counterfeit products. Scammers love gold just as much as investors. Now, let's pit gold against cash. Cash is king for liquidity. You can grab it and go. But when inflation comes knocking, cash melts faster than ice on a hot day, while gold holds strong. Gold also shines when banks wobble or currencies collapse. It's the ultimate security blanket. That said, gold's long-term returns outshine cash, but it's the tortoise in the race, not the hare. Experts say 5 to 10% of your investment portfolio in gold is the sweet spot. Diversify, hedge against risks, and sleep soundly knowing you've got a little gold in the mix. Let's talk supply. The world has about 54,000 metric tons of unmined gold, mostly chilling in Australia and Russia. At current mining rates of 3,500 metric tons per year, those reserves could last 15 to 20 years. But don't panic. Recycling gold and new tech could stretch that timeline. Timing is key, though. Historically, March, early April, and midsummer are prime buying seasons for gold. And when the economy or politics get rocky, gold prices tend to spike. Pro tip, keep an eye on the chaos. It might be your golden ticket. Now, imagine a US dollar collapse. Sounds dramatic, right? But here's what could happen. Gold prices would explode past $3,000. Demand for it would surge, and in some cases, gold could replace the dollar in trade settlements. Wildest scenario? A revaluation pushing gold to $10,000 per ounce. Yeah, if the dollar crumbles, gold's going to be the rock everyone clings to. Speaking of gold's global impact, let's talk about the big players. The US leads the pack with 8,133 tons of gold, followed by Germany and Italy. But fun fact, Indian households collectively own 25,000 tons, more than any country. Gold's returns over the last 15 years? An impressive 11% annual growth. And looking ahead, analysts forecast 5.2% annual returns over the next 15 years. Oh, and if you're hunting for cheap gold markets, check out Hong Kong. No taxes there. The US also sneaks in with occasional low premiums on gold coins. In the end, gold's story is one of resilience. It's a safe haven, inflation hedge, and a store of value that stood the test of time. Sure, it has its risks, but its unique qualities make it a crucial part of a diversified portfolio. Analysts are bullish on gold's future, thanks to soaring central bank demand, geopolitical uncertainty, and inflationary pressures. So, what's the verdict? Gold isn't just an investment, it's a legacy asset. And as the world changes, one thing remains constant: gold's ability to shine through it all. Thank you for watching. Please hit the like button and subscribe to this channel if you have learned something today. See you in the next video.